Good morning, traders. This is Brad Matheny. Today is the 10th of September. This is the Plan Your Trade video for the 10th of September. And we are looking at a consolidation pattern in carryover mode today for the SPY. That means that we're probably going to see a very mild trading range within this roughly 543 to 549 maybe area. Yeah, probably kind of in this area here. I don't expect much outside of this range. We are consolidating, and I want you to remember that we are going to move into a breakaway rally, trend carryover. So after today, with our consolidation bar, we're going to move into pretty solid upward trending. Let me get rid of that. Come over here. And you can see we're going to move into pretty solid breakaway bar, likely moving higher, and another breakaway bar, likely moving upward, and then another rally bar, likely moving upward, maybe quite extensively. So we've got this really solid rally type of mode setting up over the next 3 to 5 days. And as I mentioned to you in the weekend video, as well as others, we're looking for a topping pattern out here near the 19th and 20th. So be aware that, we could see, ideally, what we're looking for, guys, is we're looking for price to try to move back up above this level. Ideally, if we're going to keep this uptrend in place, we've got to get above this 566 area, in my opinion. If we rally up into this area and stall again, then we are going to roll downward quite aggressively. If we rally up through this 566 area and continue to climb, then we may not see that rollover on the 19th, or it may be rather muted. This would indicate the ability for price to establish again a new high, push higher, and possibly roll. If we do get a roll, we might get a roll that's only moderate before climbing into that October base. So it's really going to depend on what's going on over the next literally 3 weeks. And that's why we're going to play this as what's in front of us and really take a look at it. So right now, we're kind of looking for this rally mode. I'm expecting to get back up into the 559, 560 area. We're still, 15, 20 points away from that. I really do think that we're going to probably end up in this 560, 561 area, maybe even higher over the next 4, 5, 6 days. We'll see how it plays out. Okay. But today is a consolidation pattern. And again, today it's probably going to stay within that 543 to 549 range. We'll take a look at gold. As I mentioned earlier, gold is likely going to try to roll back up into this 2560 area, maybe a little higher. This is going to be an area for gold traders to really look for some sort of an exit point right over in this area. I don't think we have much more to the upside unless, as I showed you just now, the SPY moves considerably higher than, above the 566 area. So I am very concerned of a rotation in this area leading to a larger breakdown in gold. And that's going to be contingent on the SPY failing to break above the 566 area and really rolling downward. This will cause a big, what I call a flash crash or a deep V kind of a bottom. You can see it right here. I believe this is set up possibly around the U.S. Spending bill that has to get done before the end of September, possibly post debate debacle. Who knows? But I believe that we are going to run into some congestion period here between the 23rd, 24th of September and really down into this area, probably around the 30th, end of the month, getting into a basing pattern down in this area. And then that'll lead to a potential rally in gold eventually. So we'll have to see how this plays out in gold. Same thing will happen to silver. It just won't be so pronounced. Taking a look at silver again, you can see how I've drawn this. Same kind of thing, basing down here near this lower September, call it 24th through October, October 5th type of area. So, I mean, if we were to look at the reality of the scenario, maybe moving up a little bit, maybe rolling into this area, and maybe breaking down fairly quickly into a deep V, and then rolling back out. So again, various outcomes, but that deep V pattern, I think, is pretty well baked into the market unless the markets change direction. So now let's come over to Bitcoin. A lot of people were questioning my analysis. I know one guy in particular was bugging me last week, asking about, do I still think it's going up? Do I still think it's going up to 92,000? Yeah, I do. I think that the markets are in a very odd state of shock, let's say. And this retesting of this low is a very solid confirmation of an upward trend, I believe. It's telling us that this low, this rejection here, and the rejection that came back over here has reestablished this 53,000 area as deep support. I originally labeled it at this 57,000 area back over here, indicating that I thought the 57,000 area would be critical support. Now I need to see what price does here. Now, honestly, not sure that Bitcoin's going to roll into a downward trend, but it boils down to this. It boils down to, if we're going to see Bitcoin make a move up into the 70, 80, 90,000 area, we're going to have to see this inverted head shoulders formation hold up, which so far we are seeing. And we're going to have to see Bitcoin make an aggressive move up into this upper area and then break out. So we're really looking at this 65, 64,000 downward blue channel right here. And I'll highlight it again. You can see it. This downward blue channel as the boundary of price. So at this point, we need Bitcoin to move higher, up above 60,000, up above 62,000, up above 63, 64,000, up above really this area right here. We need Bitcoin to get up above this bluish rectangle area, 64,000, and rally out of this channel. And that could mean, again, if my analysis is correct, that could mean that we are going to see a fairly solid rally up in the next 4 or 5 days, up until about the 20th in this area. Then we may get that shakeout low and then rally back out as gold would do. And so understand that that could be our mode. Same thing kind of with gold. Gold is probably going to move higher. There's gold again. Try to spread this out. And again, gold, I'll try to redraw if I can this rotation. So I've drawn this move here. Now imagine that gold is able to establish a new high up in this 93 area and retest. So now imagine that gold is able to rally up into this 593, 2593, 2600 area, and then roll down into a moderate low, retesting this 2480, maybe 2513 area, and then roll out of this and really start to accelerate. Okay, that would be a move similar to what I just drew in Bitcoin. And I believe that could be a very solid move. I believe that could be a very accurate type of move. So be aware that, we're really looking at a broad rotation between now and say October 20th. And I believe this rally phase, depending on how high it goes, gold could move up above 25.70, 25.80 very aggressively over the next 5, 6, 7 days. It's not like we haven't seen gold move very strongly. This is daily. 1, 2, 3, 4, 5, 6, 7, 8. 8, 9 days there. We got to move from 24.23 to 25.61. So that's $140 in 8 days. $140 move here would put us at 26.80. Okay, that'd put us way up here, way up in this area. So we need to be patient here. This rally is really going to kick in, I think. So we're getting into this breakaway rally. Then we get a gap reversal top, gap potential top. And this is where I think the topping pattern is going to set up, right around the 19th, 20th, 23rd, that whole area. Okay, did I miss anything? 11 minutes. Let's go take a look at the QQQ. So we are at 454.80, a little higher. And again, this is what I drew yesterday with the rolling, but again, it's just a matter of, we could see this roll quite a bit higher. So I'll leave that there. Move this quite a bit higher up here. So we could see a move really up in the 470, 475 area on the QQQ before rolling. But like I said, it's contingent on getting above this high. So we've got to get above this high on a big rally to be able to have a chance to rally out of this consolidation period. Otherwise, we're going to move into this rolling consolidation period, trying to retest this low. Now, I need you to understand that failure to retest this low back down here and break below it would indicate that we are going to turn and rally back out of this. This would be a breakdown of this entire excess phase peak pattern right here. We've got the beginning, the counter trend, the breakdown. Now we're going to go into a secondary kind of an excess phase peak here. Peak, rolling, counter trend, breakdown. We're going to see how it plays out here. But this is a move the vortex rally here. This is a dual excess phase peak. The way it's working out here is very interesting, actually, because we have the excess phase peak pattern reaching a new high here, rolling down, flagging, breaking downward, and then we have the same thing, a peak setup, flagging, and eventually possibly breaking downward. Now, if this break downward holds at this level, if this becomes our critical support zone right over in this area, if that becomes our critical support zone, then we could see this entire correctionary phase, this rotation play out as failed excess phase peak patterns. So in other words, we roll, we come back, we flag, we break down. We roll, we come back, we flag, we break down. Okay, fine. I get it. We're breaking down, we're rolling. But if we are unable to get below this low here, then we are going to see it turn right back around and try to rally up out of this mode very aggressively into 2025, which I believe is very likely the case. Okay, I think we covered just about everything. Gold, silver, QQQ, SPY. Okay, that's it. Let's have a good day. Again, I have an appointment this morning with my wife. We're going to get that all handled, and we will go from there. Talk to you guys later.